Hello, everyone, and thanks for joining this Onward event, looking back at today's spring statement from the Chancellor. As I think most of you know, Onward is a think tank founded in 2018 whose mission is to develop bold and practical ideas to boost economic opportunity and strengthen communities in all parts of the UK. I'm Tim Pitt. I'm a policy fellow here at Onward and a partner at consultancy Flint Global. I was previously a special advisor at the Treasury to the previous two Chancellors, Philip Hammond and Sajid Javid. And I am delighted to be joined by an excellent panel this evening to look back at today's events, all of whom bring very different perspectives, I'm sure. So we have Anthony Brown, the Conservative MP for South Cambridgeshire and a member of the Treasury Select Committee, who prior to becoming an MP held a range of positions in journalism, politics and the private sector, focusing on different angles of economic policy. We have Shawn Havill, Director General of the British Chambers of Commerce, which he joined last year from the Cabinet Office, where she ran the business partnerships team following an extensive private sector career. And we have Anna Isaacs, the economics correspondent at The Independent, who's had a range of positions in journalism, including at the Wall Street Journal and the Politico. Welcome, all three of you. Very good to have you here this evening. Before we kick off, I just want to do a quick bit of housekeeping. The conversation is on the record. In terms of the format, the panelists will each provide opening remarks of about 5 minutes, after which we will have Q&A. So please do put your questions into the Q&A box on Zoom, and we will try to get through as many of those as possible. Now, before handing over to the panelists, I thought I would very briefly outline the key things that we discovered today, both in terms of the policy announcements and the economic forecasts, before getting our panelists' views on them. Now, in terms of forecasts from the OBR, they significantly revised growth down this year, so from 6% down to 4%, and that's because of the supply shock that we're getting because of the massive increase in energy and commodity prices, and inflation as a result is sharply higher as well. So that's going to be 7.5% compared to 4% they thought in their previous forecast. They are not, however, predicting a return to the 1970s. They think the economy will largely be able to shrug off these external shocks and return to the low inflation, sadly lowish growth years that we sort of got used to after the financial crisis. But they are also very clear that given external events, particularly in the Ukraine and the impact on the global economy, that the medium-term outlook is unusually uncertain, as it has been pretty much for the last 2 or 3 years through COVID and all that. Now, in terms of what the Chancellor announced, the main focus obviously was a fairly meaningful package aimed at supporting Middle England, really, on the cost of living. So he cut fuel duty by 5p for the next 12 months. He's permanently raising the national insurance threshold to £12,750 from July, simplifying the personal tax system by bringing that into line with the income tax threshold. And then he announced plans to cut the basic rate of income tax by 1p, though that is delayed until 2024. There was also some quite limited support for the most vulnerable. There was a £500 million of further support, but there was no broader uplift to the benefit system or to universal credit. And then from a business perspective, there was only limited short-term support. So the employment allowance was raised to £5,000 to help small businesses. Perhaps more significantly, though, the Chancellor laid out his plan to cut and reform business taxes. So he announced the Treasury would consult with business on reforms to 3 parts of the business tax system: the apprenticeship levy, investment allowances and R&D tax credits. And that you consult on those over the next 6 months with a view to announcing permanent changes at the autumn budget. So there is a lot for us to chew on over the next hour or so. And with no further ado, I will hand over to our panelists. Anthony, can I come to you first? The Chancellor had a pretty tricky hand to play today politically. How do you think he got on?
He did. Well, it was actually a far bigger package of measures than I was expecting. I think most people were expecting, and having had many conversations with people in the last few weeks, we thought it would be fairly limited. But actually, the changes like the cut in fuel duty that you mentioned, 5p, that's a £5 billion tax cut for 1 year. It's quite significant. And the change in the threshold in national insurance, something I strongly support for reasons of tax simplification, just to create a threshold of £12,500 where people know below that they don't pay income tax or national insurance. Most people thought he'd only change it by a few £100. Actually changed it by about £3,000, and again, £6 billion a year permanent. That is a big measure by all accounts. And just as a point of sort of expectations management beforehand, I think in the age of COVID, we've gone through, we've sort of come to believe the government can solve everything, as it were, and all the sort of extraordinary £400 billion support the government gave to businesses and to individuals throughout that pandemic, a whole range of different schemes, often very generous. And I know a lot of, people, my constituents have come to me saying they really appreciate government support, that we've sort of thought, well, when there's any trouble on the horizon, the government can wave a magic wand. But there are limits to what the state can do. I mean, there is a cost of living crisis. It's very real. Lots of people are really suffering. It's not just the UK, it's happening around the world for much the same sort of global reasons. And but the resources of the state just aren't big enough to sort of wish it all away and say, right, we're going to make sure everyone's as well off as they were before, because ultimately the state is just made up of people. And if we're all feeling worse off, there's limits to how much the government can do. What it can do is help people at the lower end of the spectrum and ensure the distributional impact is not as severe as it would otherwise be. And the other constraint the Chancellor obviously has, in your introduction, you said he had a tricky hand, is we've still got a massive budget deficit. I mean, it's still, this year, the government will still be spending more money than it's got in income, it'll still be borrowing. The same is true for next year. We've got a national debt that's shot up to about nearly 100% of GDP. I mean, it went up massively in the financial crisis, which was a once in a 100-year event just a decade ago. We've now had another one in a 100-year event with the pandemic, and it's and the interest servicing cost of that is enormous. Increasingly, it was very low because interest rates were so low, but interest rates have gone up. They're now they've gone up about 0.5% in the last just 2 months. Obviously, that's creeping up with a range of announcements from the Bank of England. But that every percentage point increase in interest rates is another £23 billion in interest payments, and that is a very serious amount of money. It's the entire Home Office budget combined. So if interest rates do go up to 3%, say, then that really, which is what economists seem to expect, then that's a really big hit to the public finances. So he's got this very tricky hand to play. He's had a bit more headroom from like rising fuel prices means there's more fuel duties and VAT has come in, but that's the balance is struck. And as I said, I think it's done. The mood in the chamber, I was there during the spring statement and the debate after, certainly on the Conservative side, was very, very buoyant. We really welcomed it. We certainly like the fact there's tax cuts coming. I mean, so tax cuts now with national insurance, but then the income tax cut coming in 2024. That actually, the Chancellor's often said he's a tax cutting Chancellor, and that's sort of within the instinct of the Conservative Party, and he's now put sort of meat on the bones there, as it were, and said, well, this is what I want to do, and that was very much welcomed. And tax simplification, I certainly believe in simplifying taxes if you can. Not always, well, it's always very difficult to do. George Osborne wanted to simplify taxes and managed to complicate them quite a bit. But the raising the national insurance thresholds to the same as the income tax, a personal allowance, certainly simplifies it in terms of the understanding from the public of when they need to pay tax and don't pay tax. And then the other thing is the measures on growth, because I mean we all agree. And we do hearings on this in the Treasury Select Committee, and the one thing everyone agrees is, we need as much economic growth as possible, which is obviously motherhood and apple pie. I mean, clearly we do. It makes people better off. It helps government finances, and I've never known a government not to be interested in economic growth. The question is how you get there. He's been quite structured here. He gave his May's lecture a few weeks ago, where he set out his belief in a new culture of entrepreneurship, but he set out his principles there that he wanted to encourage business investment in particular, which is quite low in the UK compared to the OECD. The question mark there is, how do tax incentives encourage business investment? We did have a policy beforehand of cutting corporation tax, that's saying that, well, companies that have more money, they therefore invest more. There's a sort of big question mark about, is that quite the most effective way or cost-effective way of encouraging business to invest? And it's now got this new super deduction that has come in, which makes it cheaper for companies to make investments. And the initial evidence that I've seen from that, and I'd certainly be interested to hear from the British Chamber of Commerce their view on this, that the CBI has done some research on that, which suggests that it's actually been quite an effective way of increasing investment. But then the other bit is skills, obviously, and there's the apprenticeship allowance, which has come in for a lot of criticism. How can that be tweaked to upskill people? And then the third bit is the research and development, or what he calls the ideas that actually, we've got a very generous research and development tax credit system in the UK compared to other countries, but we still don't spend that much money on research and development. The question mark why the government's consulting on that. I mean, I've got some theories. I mean, partly because we're quite a service-based economy, and I do have sort of question marks about what the measurement of research and development actually is, because often I used to work for Morgan Stanley Investment Bank. We did a lot of research and development, but I'm not sure any of it counted in the official figures. So anyway, but it'd be certainly interesting to see what comes out of the consultation there in terms of how to tweak the tax system to encourage research and development. So the two big measures here, helping with cost of living, very, very welcome, far more than most people are expecting, and the focus on growth, very, very welcome and done in quite an intelligent way. And tax cuts, that's we're always happy with tax cuts in the Conservative Party, but it was, I think, very widely welcomed in the Conservative Party, this statement, far more than previous ones.
Thanks very much, Anthony. And I share your cynicism about people's view on growth. My great frustration is that people say all the time, all the Treasury needs to do is just focus on delivering growth.
How? You can't just press a button for growth.
Exactly. But that's lots to unpack there. And so just quickly before I come to Shawn, I'm interested to your question on the tax side. Chancellor's obviously been under a lot of pressure. And Labour have been attacking, particularly as the high tax chancellor, the high tax, low tax chancellor, but also from the right wing of the Tory party on the tax side. He has obviously delivered a significant package of tax cuts today, but it only sort of unwinds a quarter of what he announced last year, and ultimately he had a job to do on fixing the public finances. But it sounds like, I'll ask this question, but do you think he's done enough on the tax side to satisfy the parliamentary party for the time being, at least?
Absolutely. I mean, so it's the first time we've had we've actually sort of made real this promise of tax cuts, because before it's all been sort of rhetoric, where we believe in tax cuts and lower taxes, but at the same time, taxation levels in the UK are now the highest since the Second World War. I mean, and public spending is the highest since almost the Second World War as a share of the total economy. And so it's been quite frustrating for the Conservative Party that likes to think of itself as a low tax party to actually preside over such high levels of taxation. But it is because of circumstances, as you say. I mean, first of all, the global financial crisis, which was a huge economic shock in many ways, greater than the pandemic, but then the pandemic as well, which needed huge amounts of bailing out. And I really don't think the Chancellor had any choice other than to raise the amount of tax collected, because you have to repair the public finances, and that in a way is sort of the red line. I mean, that you I don't need to tell you this, you're all very economically literate. Governments can't carry on borrowing unlimited amounts forever. You have to pay it back at some time, or at least stabilise it. And we can have lots of debates about fiscal strategies and getting the overall debt down and within the envelope of growing GDP and everything else. But it's the Chancellor had to provide confidence to the international markets and the sort of bond markets that actually we were a credit-worthy country and we had our finances under control, because otherwise the government would end up paying higher levels of interest and it would get far more expensive. So he really didn't have, even though he said from the beginning he's a fiscal conservative and a tax-cutting chancellor, the hand dealt with him was about the most appalling hand any chancellor could ever have. But so now, as of today, though, he's been able to say, look, it's not just rhetoric. I'm actually going to make it real. There will be tax cuts, some now, some in the future.
Great, thanks very much, Anthony. Shawn, can I come to you now? Lots of focus in the run-up to the Spring Statement, understandably, on households, but businesses are under pressure too. You've seen business packages at these events from the inside and from the outside. How do you think that the Chancellor did today from a business perspective?
Thanks, Tim. Great to be here. For those in the audience who don't know the chambers, just to say a quick word, as the British Chambers of Commerce, we represent the 53 chambers of commerce across the regions and nations who have as their members just under 100,000 businesses representing about 6 million employees. We are that sort of central voice into government and the media, and we also have in our network 76 and counting international chambers all around the world. So truly a unique organisation. Just to give a bit of background on how we got to here. So I actually, when I joined in May, one of the first meetings I had was with the Governor of the Bank of England. And the CEOs of our chambers around the country were already beginning to hear that there were significant increases in raw materials for some of their businesses, which I talked to Andrew Bailey about as a concern. The bank were less concerned about it at the time, but that raw material cost increase never went away. We then saw significant increases in shipping costs for lots of businesses, recruitment issues. And then through the winter, you'll remember we began to see increases in energy prices. So fast forward to today, it is real crunch time now. I mean, energy prices. So I had a call from actually one of our businesses in Cambridgeshire, which I believe is one of yours, Anthony.
I'm South Cambridgeshire, but yeah, it might be one of mine. Yes.
Their direct mail company. So their energy costs were going up. This month they pay £14,000 and next month £46,000. So not only are the costs going up, but lots of small businesses are being moved off fixed rates onto variable rates, so can't even plan for it. So, you know, really significant, real crunch time. And, you know, we showed, our data showed that in February that 75% of firms were looking at increasing their prices. And that was obviously before we had to take into account what was going on in the Ukraine. So businesses try to absorb prices for as long as they can. They don't want to pass them on, but they're going to have to pass them on. And that, of course, is going to impact the cost of living crisis, not just the cost of doing business crisis. So we really wanted to see a couple of things from the Chancellor today. We wanted him to, we basically said to the Chancellor, you know, it's not business as usual anymore, Chancellor. Really need to signal to business that you're behind them, because, you know, the Chancellor's been massive supporter of business through COVID. I mean, hugely, and businesses are really positive about the support they've got from the Chancellor. So, you know, don't give up now. But effectively, we wanted to see a delay in the national insurance increases next month, and an SME, a temporary SME energy price cap, because as you know, many smaller businesses buy energy like households do. So what do we think about today? Well, fundamentally, it fell well short of what we wanted to see for businesses. And we know it's only going to get worse. Great to see increase in the employment allowance. And of course, the cut in fuel duty will definitely provide a small amount of headroom. Smaller businesses, you know, in certain sectors can use a fair amount of fuel. So a little bit of headroom. And, you know, Anthony talked about this earlier, but of course, we always welcome a cut in taxes on business investment in the long term. To your point on growth, you know, we all want to find ways to help businesses invest more. Apprenticeship levy is an excellent thing. It can be, you know, we can always be better at it. And of course, R&D tax credits. We can come back to it. I think R&D tax credits are used by businesses who know how to use it and not by those who don't. So I wonder if it's actually more of a comms thing than anything else. So as I say, didn't really do what we really wanted it to do. There's just a tsunami of costs that our businesses are facing. Again, businesses don't want the government to continuously have to prop them up. They want to get back to growth, but when they're facing into constant increasing costs, you know what they do. They slow down production, they stop recruitment, you know, they don't invest. So we would like the Chancellor to have another look at, you know, what you can do about energy prices, even in the short term for SMEs.
Great, thanks very much, Siobhan. So it sounds like there's still quite a few big asks outstanding from a business perspective, and I'm sure more pressure will come onto them over the coming months in the run-up to the autumn budget as well. And I think it'll be interesting. We can come back to it. I think your sort of views. You obviously laid out quite potentially quite wide-ranging plans to reform the business tax system, and it'd be interesting to get your kind of take on that as well. But why don't we come back to that? Anna, shall I come to you next? Anthony's given us the political view. Shawn's given us the business view. Do you think he got the kind of big calls right from an economic perspective?
I think that's a really difficult question, because he was in quite a difficult spot. So I totally hear Siobhan and Anthony in terms of some of the difficult choices that are being faced right now. I think starting from a premise of where are we in terms of the tax burden, we are still at this 1940s level, right? We haven't had taxes this high as a share of GDP since the 1940s. So I still struggle with the notion of, does he pass the test of as a low tax chancellor in economic terms? I think in terms of where he is choosing to be generous, appreciating the fact that it's been an extraordinary time, he's faced shock after shock after shock for the UK economy, Russia being just the latest. That's very, very difficult. But in terms of where he's targeted some of that, some of that relief right now, there are big questions about what that will mean for consumption going forward and the general health of the economy as we go towards the autumn. So although it does simplify in some ways having the same threshold for national insurance and for income tax, actually the main relief of that will be felt, yes, by some low earners, but it does nothing for people who have in real terms faced a cut in terms of benefits. Obviously, there's a lot of concern about those people who aren't working households necessarily, or who have limited exposure to the labour market through only one working parent. A host of voices from left to right are concerned about how people will deal with what the OBR calls a 5% real terms cut in their incomes. So 1 in every £20 they have is just being wiped out by inflation. So that is very concerning. More generally, a lot of the OBR's forecast is predicated on the fact that people will still keep spending on discretionary things that go beyond the bare essentials, because they've banked up some savings during the pandemic. I think that's a risky estimate of how people will behave based on the fears they've had to deal with during the pandemic. I think we're assuming that the great British consumer, who is this huge driver of growth, who goes out and spends their money and generally runs their savings quite low, unlike our German counterparts, for instance, I think we're assuming that will continue as it has before. I'm a bit concerned about what that might mean when we've got slightly shaky evidence of consumer confidence at the moment. So I think there's a bit of a gamble here. I think what we have is Rishi Sunak, who's gambling, who's thinking, how can I walk as good a line as I can on being fiscally responsible, whilst also really looking ahead to the next election. And I do think it was a statement that was led by political interest more perhaps than it was led by economic interest. Because you do hear a lot from the energy intensive firms in particular that they are very concerned about their ability to manage. We've seen gas prices, for instance, go up by nearly a third compared to February last year. That's absolutely extraordinary. And they're going to continue to be volatile. So people have to buy these fixed chunks of energy at a time. They can't choose when to spread their costs a lot often if they're an intensive energy company. We're also hearing a lot about inflation in terms of the impact on the public finances, and the Chancellor emphasised that a great deal. Now, only a quarter of the UK's debt is linked to the retail prices index, where the vast majority of that hefty bill, as it were, is supposedly coming from. That is set to go down. That measure of inflation is set to go down. So we're unlikely to see that sustained level of much, much higher cost of servicing debt. So there is a balance to be struck between smoothing the course of the debt and smoothing the course of easing the country off its experience with hefty fiscal support during COVID, and whether or not we're doing it a bit too bumpily. I think that's what I'm hearing from a lot of economists is, should we be smoothing this out a bit more when we are going to see this extraordinary autumn increase in energy bills again for consumers? They know that's coming now. People are starting to realise. I think overall, I'd say it's not a terrible balance that's been struck in terms of what it might mean for economic health, but it may have made sense to cut different taxes, or rather to have more of that energy put towards raising benefits, because when people see and read about the poorest in society struggling a lot, even if they might have a higher income, that makes them feel less confident. So I think we're taking this big gamble on consumer confidence going forward. And when businesses are saying they're going to be struggling, when we're going to see perhaps insolvency rates for firms going up, when we're going to be seeing fuel poverty rates going up, when we know that this big hefty bill is going to land on the doormat in October, and we're going to start feeling that squeeze. We all talk about this sort of thing all the time. People feel it when it actually comes to them in a bill. That hasn't even happened yet. I think we are underestimating the confidence shock to the UK economy, and I'm not sure that the Chancellor fixed that today.
Thanks very much, Anna. That's very, very interesting, and again, lots to unpick there. And actually, I'd like to come to the consumer confidence point in a minute, and Siobhan, particularly get your view on that. But one question I just wanted to pick up on before I get there, Anna, was the point about inflation. One of the things I imagine the Chancellor was worried about is obviously different now, but some of his, there are famous examples of his predecessors. When you're sitting up delivering a budget or a spring statement and you've got inflation at 7.5%, the sort of names like Anthony Barber and Nigel Lawson ring in your heads. Chancellors who stood up and in those circumstances delivered significant tax cuts and ultimately fueled and made the problem worse. And that fueled inflation, interest rates had to go up even more sharply, and ultimately a kind of recession followed. Is your view not that and yes, today I think we saw the Chancellor loosen roughly by about £10 billion a year. Is your view then not that the level of support was not generous enough, but it wasn't balanced right between it wasn't then distributed, or do you think it was both not generous enough and then not shared out in the right way?
More of the former than the latter, I'd say. I'd need to sort of move around all the different pots of money to properly answer that question, but I'd say incorrectly targeted for the stage at where we're at in terms of this big energy price shock. So it may have made more sense to cushion those at the bottom further than to deliver this significant tax cut via national insurance contributions just now. I'm also concerned about the fiscal responsibility of reducing those national insurance contributions when we're talking about the need to be fiscally responsible. He's wiped out half of what the health and social care levy is meant to raise. So they've hypothecated that they're going to give the health service and social care 12 billion a year for the rest of the spending review period. That has to happen because they've committed it, but they're only going to raise 6 billion now from the increase in national insurance contributions. I appreciate there's other tweaks and shifts they've made to potentially make up some of that, but I'm worried about what that means for the long-term understanding of how expensive the challenge of social care is going to be. So it's not necessarily that I would suggest you to have a huge loosening at this stage, given the need to be responsible. It's that I'm not convinced it was in the right places, and I'm concerned about how sustainable the places he chose to shift in are.
Anthony, what's your view on that? As you say, it's gone down pretty well with the parliamentary party, taking a penny off income tax, the big NICS threshold, fuel duty, but all of those measured to varying degrees. I mean, they are more progressive than the proposal to reverse the NHS and social care levy, which was obviously being pushed by the Labour front bench, which was sort of slightly odd that you had the Labour Party pushing the most regressive of all the sort of tax options on the table. However, Anne's absolutely right. If the people who are going to feel the squeeze the most over the next 12 months, 18 months are the poorest households. And if you're looking at a package designed to support them, you wouldn't have chosen the levers that the Chancellor has used today. Do you think it's a problem that he hasn't, for example, uprated benefits coming in April? They're being uprated by 3.1%, which was CPI last September. Inflation's actually going to be 8%. Do you think that is a problem that the Chancellor should have done more on today, or that he might have to come back and do more on in the future?
Well, first of all, the thing, as you said, with the national insurance threshold thing, it was almost all the benefit goes to the lower paid. I mean, if you're earning, I think it's under about £45,000 a year, you'll end up better off even with the national insurance rise than you were before. So 70% of workers will end up better off as a result of it, and it's just those earning over 45,000 that will end up worse off. So it is definitely a change that's well targeted from that point of view. And in terms of cutting fuel duty, I mean, clearly, the very poorest don't have cars, so they don't benefit from that. But I can tell you, even in somewhere like South Cambridgeshire, which is pretty affluent but rural, there are a lot of people on pretty low incomes who have to drive their cars because they live in villages and they need to go somewhere to work, they're nurses or whatever, people on pretty modest incomes. And fuel is a very, very big part of their daily income. And so any relief the government can give on that is very, very welcome from their point of view. You asked about benefits. I mean, the system that we have, as you say, it's uprated at 3.2%. One of the things I would say about the Chancellor that we've learned about him since he became Chancellor is he is incredibly nimble. And I've been, throughout the pandemic, he kept coming up with new announcements almost a monthly basis, a new sort of budget or whatever, really big announcements. And we had an announcement back in February on the, this was a £9 billion package back in February, which was the £150 off council tax for properties in the A to D bands, and then the £200 deferred payments on energy bills, and again, both those measures, or certainly the council tax measures, fairly reasonably progressive. He looks at what's going on, and then he'll sort of make a new measure. And I'll be surprised. This isn't going to be the last thing he does on cost of living. I'm sure there'll be other stuff, and it wouldn't surprise me if there's other stuff before the autumn budget. So he keeps it all under review. And I've also been quite impressed actually with how, I'm not just saying this because he's Chancellor, not Conservative. It's generally true about how big decisions he's made. I mean, because it's very easy as Chancellor to try and really trim and do little things, and you're always really worried about the impact of anything. And the instinct is always really to do the smallest possible changes. And actually, these are reasonably big, pretty big changes. So he's shown that sort of boldness as well. So yes, there isn't anything on benefits in this now, but I'm sure he'll be looking at the impact. There was a distribution analysis published today of the tax and benefit and public spending changes since 2019, and it showed the Treasury analysis that actually the overwhelming benefit has gone to the bottom decile, those on the lowest 10% of incomes, and actually the people on the top 10%, they've ended up contributing an awful lot more and paying more. And it's certainly from that analysis, it does seem the overall package, you've got to see it in the round. It has been, very progressive what the government's done over the last 2 years.
And I think that is a very fair point. In my experience in the Treasury, is always a great frustration is that everyone focuses entirely on what you have announced today, rather than what you've done over a period of time. And ultimately, not every single measure can be very progressive, right? You do have to. And
the other thing, the other thing as well, there's other announcements, things like the national minimum wage or living wage that has gone up really quite dramatically in the last 2 years. And if you are on that, then that's been a huge increase in your income as a result. I mean, paid by companies, by Siobhan's members rather than by the Treasury. But as an employee, that's has brought massive benefits to an awful lot of people. And there are a lot of jobs out there now. I'm certainly delighted that unemployment is basically back down to the level that it was pre-pandemic. We all thought going into this pandemic that unemployment would go up to 1980s levels. It's not. And actually what we've got is skill shortages. And that's a pain for Siobhan's members. And for employers, that's bad news. But actually for an employee, there definitely are jobs out there. I mean, I know in my constituency, I've never... The only complaints I get about jobs are from companies saying they can't get enough workers. I haven't had any complaint from any individual saying they can't get a job. And so, there are that is obviously good for individuals. And you do see pay rises in certain sectors are going up. I mean, the HGV drivers is probably the most extreme example, where there's a shortage of drivers there, and they got huge pay rises. And again, that's bad for inflation, bad for employers, but actually for those drivers, I'm sure it's incredibly welcome.
Thanks very much, Anthony. We've got various questions in the chat, so I'm keen to get on and answer and ask you some of those in a minute. I had one final thing I wanted to come back to, which Anna talked about, and Siobhan, I'd be keen to get your view on, which is this question around consumer confidence, and the OBR essentially saying, not it's fine, but consumers are going to dip into their savings to deal with this hit to incomes, and that is going to shore up the economy. Actually, what are you hearing from businesses when it comes to consumers? Do you know is that borne out, or do you think actually some of the data you see around consumers actually is that they are very worried about what's coming, and that might push them into a more conservative place and start actually saying, I need to bank up my savings rather than spend?
So we talk about consumer confidence and we talk about business confidence. They are closely linked, because the bottom line is, at the moment, when I'm running a business and I'm just facing into new on cost, I ultimately have to start putting my prices up. And I might be part of a supply chain, but those price increases run down the supply chain until they eventually hit the consumer. So, that is what people are going to see, continued price rises. So that will definitely hit consumer confidence. I think Anthony's right in terms of recruitment. We've been in a place amazing, 1.4 million open roles in the UK, which is great. Is great from a employee point of view, but again, it's another drag on the growth of your business. And actually, when you talk to businesses, normally between sectors, you get different stories, but actually the recruitment bit is universal across sectors in terms of trying to find people. And what they're finding is having to put up wages, and they're still losing people to their competitors or somewhere else for a salary increase. So that's just another on cost. And on energy, I think we talk about business like it's one thing, and we know it isn't, right? So small businesses buy energy like households, like consumers, but they have neither the protection that consumers have, either of a price cap or with the new rebate, and they don't have the negotiating power of large businesses or the balance sheet to see them through. And they're already got pretty tight cash flow and possibly still a COVID loan. So, I don't mean to sound terribly dismal, but there are lots of sectors of the economy where it's just really, really hard.
Okay, yeah, unfortunately, it is all, and it feels like the last 2.5 years has been pretty gloomy. These sort of post OBR analyses of what's happening to the economy over the next few years. I'm hoping at some point it's all going to be sunlit upland, but we're not there yet.
Well, Tim, I probably should say that there are sectors of the economy that are doing really well. So I spent last Friday with the creative industries out from the west of London, and it's booming. They can't build enough studio space for the amount of production that what the big studio houses want to run here. It was a really good story. So it's not across the piece, but when it comes to the SMEs across the nation, there's still a lot of challenge.
Great, thank you. Right, let's move on to some of the questions in the chat. And one of them, I think, is Onward obviously does a lot of work in this space, which is about the regional agenda, the levelling up agenda. And the question really is around, what do we think the cost of living crisis is going to do to the levelling up agenda, and politically, how much of a problem is it for the Conservatives? Anna, maybe shall I start with you? What's your take on the sort of regional impact of the cost of living crisis? Is it pretty widespread, or do you think it's going to be particularly difficult in those politically salient areas, the kind of red wall seats?
Sure. So I think it's going to be really, really bad, and I don't think the latest changes are going to do quite enough. Because in terms of the political risk meets the economic reality, that's kind of the frame in which I'm speaking, not in terms of a personal view. But as we've mentioned, outside of London, between 70 to 80% of people will commute with a car. Those are those seats. The vast majority of people will be going to work with a car. The 5% of fuel duty will only just touch the top of the overall impact and the cost of fuel that people will feel. In terms of where inflation is going to be greatest as well, we kind of need to think about that in terms of political sensitivity. So it's going to be felt in fuel and cars. And if you were to, fuel and food, and if you were to write down two things that would freak out most politicians, left or right, those would be the things that they would least want to see inflation in. So I think it is going to be very significant. I think the broader question will be as well, is if this is compounded by a need to deal with the NHS backlog, and if that isn't cleared in sufficient time, people will associate their overall squeeze both with what's happening externally with Russia, yes, but also with what the government is doing. If people feel poorer, their attitude tends to be that the government hasn't done a good job for them. And if they associate that with also not getting the benefits they expect to see from public services, i.e., speedy addressing of the NHS backlog over the next 6 months, a year, that's going to start to become very challenging, particularly in marginal seats, where if you're trying to hit sort of people in that 30 to 50,000 pound earnings bracket who are very likely to turn out, that's going to be very, very challenging. So I think the pace of delivery on public services is going to be a very big test set against this very, very identifiable hit to the pocket. It's not going to be abstract economics like I normally end up talking about. This is going to be very, very real. This is going to be Tesco receipts and people having a bit of a meltdown at the end of the month when they realise they haven't got enough to get by, even if they're middle earners. And I think Rishi Sunak has acknowledged that in his May's lecture. He was realising, and in general conversations, he's noted the fact that this is going to be a middle income squeeze as well. And I think he has tried to target this with that in mind. I think the problem is if people see people at the bottom suffering, and as I say, and they don't see the sudden move forward with public services when they feel that the tax squeeze is actually still very big, because it is still very big, then that's going to be the problem at the ballot box. And I'm struggling to see where taxes can be trimmed enough ahead of 2024 where you might swing a voter towards you in the red wall.
I think the sort of key issue as well is not just the scale of the hit, but how long it lasts, right? So if that squeeze lasts right up to the next election, that is much more problematic. I mean, we saw in the coalition years, right? You could have quite a significant hit to living standards for about 3 years in the middle. But by 2015, inflation was zero, real wages were growing. You could say the sunlit uplands are coming. So the question is not just the scale of the hit, but also by 2024, are things getting better? And you can at least say they are getting better. If not, I think it's very, very difficult. I'd be interested to get Anthony's views on this. But one quick, follow-up question. Do you think that it is just a pretty broad brush hit across the UK, or do you think there's a regional element in particular to this, or do you think it's just ultimately everyone's going to feel a squeeze, and so it's the political impact will therefore be pretty uniform?
I think if you look at the distribution of some employers, so we've heard a bit about how difficult the financial climate is for some SMEs at the moment. We forget how critical SMEs are within certain areas of the regional economy. So if you've got a more sparsely populated area, the role that SMEs play in the labour market is often that much bigger. Or if there's an energy intensive set of businesses nearby, and we do have that in the red wall, you do have some energy intensive firms. If they start to wobble, if they start to struggle with their cash flow and they're not able to hire at the same rate, we hear these fantastic top line vacancy figures, but they don't always translate into well-paid jobs in the right places. As we know, that's the whole point of the levelling up agenda. So I think that's where things will get very, very sticky, is can people get one of those jobs that are much touted in the right area, but also can they afford things, like childcare, like the other pressures that are going to exist on their spending whilst working a very long week in one of them. And so I do think there are some areas where I can think of them. I don't want to name particular companies because I don't know their balance sheets in reference to it, but I can think of some areas in the red wall where a number of large employers are going to be very hard hit by the energy price changes. And I'm sure they're on a lot of people's polling lists.
Thanks, Anna. So Anthony, just on the politics of all this, a massive squeeze on the cost of living combined with real problems in public services and inevitable backlogs in the NHS. How worried are you politically about the sort of run into the next election for the Conservatives?
Well, the squeeze in the cost of living is clearly nationwide, but it also clearly impacts the less well-off parts of the country more acutely. I mean, if you're on a lower than average income, then energy costs and food costs are a greater proportion of your disposable income. And if those two prices of those two go up, then it'll be far more difficult for you to make ends meet. And some people will have to choose between heating and eating, as the phrase goes. If you've got a large disposable income, if you live in Knightsbridge and you work in the city, then fuel costs are not a big part of your expenditure, and food costs won't be either, and so it won't really make that much difference to you. So there is a geographic impact there, but on the other hand, the measures that the Chancellor announced today, equally things like raising the threshold on national insurance will it helps 70% of workers. But I bet you in the question was about left behind parts of the country. I'm not sure I like the phrase left behind, but it's only in parts of the country that are on lower than average incomes will disproportionately benefit from the cut in national insurance threshold. So but as we were discussing earlier, the measures the Chancellor announced today, though incredibly welcome and going far greater than most people are expecting, I think it doesn't make up for the total squeeze. So I haven't seen a geographic announcement of the announcements today, but there are you've got to see government policy in the round. There's a whole range of other measures. This was just a spring statement. There's things like the enterprise zones, for example, which are very critical in many parts of the country to try and encourage investment there. There's things like the city town centre funds and the high street funds, which are meant to help with that. We had the recent Levelling Up white paper, which suggested a whole, which will be followed by a bill, which suggested a whole range of measures to help the level up the whole country, make sure that our GDP is more equal between different areas of the country, and so things like investment, government investment in R&D, which is scheduled to rise to £24 billion a year. That they want more of that to go to places in the north of England, say, and that's I come as the MP for Cambridgeshire. Also, I want to make sure investment carries on in R&D, investment carries on in Cambridgeshire. And I don't think there's certainly no plans to cut that, but it's just that of the future growth in government R&D spending, more of it will go to the north of England. So it is really important. I mean, that we definitely, as a party, we definitely need an offer for the new red wall seats. We've got to be able to go. I mean, I'm lucky in the sense I've got a south of England seat that's very affluent, and the issues are different here. But my colleagues from the north of England, they definitely need an offering when they're going out on the doorsteps and they're sort of writing leaflets and everything else, saying what the government's done for those seats. And I think you'll see a lot more over the next couple of years, a focus for government on those northern seats.
Well, can I just pick up on that point around the retail offer, which I think is interesting, because sort of traditional political logic would say you're still 2 years away from an election, so keep your powder dry and don't do any big giveaways. Now, I completely understand the Chancellor had to do something today on the cost of living, and so he's done the big increase in the national insurance contributions. I think one of the questions someone had was, why doesn't this kick in sooner than July? I think that is purely for technical reasons. You can't get it through payrolls.
I was going to say, introducing it, it's April in a week's time. April.
I think that is reason. But
I think every HR manager in the country would have, every payroll manager in the country would have a little nervous breakdown.
But you can see why he's had to do that now. But ultimately, traditional political logic would say, keep your retail offer back that you can spring on the public at the election. He has today sort of gone against traditional political logic in the sense that he's announced an income tax cut for election year, but we're still 2 years away from election year. Do you think that was the right call?
Well, I think so. Linton Crosby, the fabled election winning campaigner, who's obviously advised the Prime Minister, he has one of his favourite phrases is, "You can't fatten a pig on market day," and you're right in the sense that people need the feel-good factor at the election. But on the other hand, you can't give them nothing for years and then just suddenly turn up on election day and give them all these goodies, because they'll just be incredibly cynical about it. You've got to show that you're consistent and that you've been thinking about it for the years to come. Your question was based on a premise there that there'll be nothing else later on. I'd be very surprised if all the economic announcements for the next 2.5 years have been announced today. There's going to be nothing else. I mean, I'm pretty sure there'll be other things coming out of the hat towards the election. I have no idea what, but I can make a guess. But it's you can't. The government has to think about these seats now. They're in pain. They're constituents across the country. They're in pain now. They need help now. It'd be absolutely wrong just to sort of push it back and say, well, we'll all wait till election time, and the public would totally see through it. Right,
very good. So we covered the politics. I think one interesting question that's come up is how the cost of living crisis is likely to affect the government's net zero strategy, which I think is, it seems like COP was years ago now, and suddenly the whole narrative have changed. Siobhan, can I come to you first on that? A lot of businesses over the last 2-3 years have all been putting in place net zero strategies. You've been talking extensively about how much pressure they're under now on energy costs. Do you think that's causing a rethink from business and a kind of reprioritization?
So going into COP, we knew that only 11% of our members had got around to measuring their carbon footprint, which, as you know, is the first thing you need to do before you can even come up with a plan of how to get to net zero. So that was a really small amount. What we hear from them is effectively, I get that, I understand it's important, but right at the moment, I'm trying to keep my business afloat. I'm worried about cash flow. I'm now facing into a whole new load of extra costs. So honestly, although it's important, it's not high up my priority list. And actually, if I was going to do it, do I have the capability to do it? Like, who in my organization can measure my carbon footprint? And actually, if I do have a plan, it's probably going to tell me that I need to invest £80,000 in new heating or a new lighting system. Well, I don't have that. So, you know, right now, if you're running an SME, it isn't going to be top of the list of things you're going to be focusing on.
What's your view about the impact that the cost of living crisis is going to have on the net zero agenda?
I think it's interesting when we're comparing macro analyses, because Germany has its housing stock is generally in better shape. When we look at, weirdly, on a household level, although we understand the problems with, I'm sure we all understand the problems with where Germany sources lots of its energy and its relationship with nuclear, etc. When we look at cost of living, Germany is better insulated at a household level, literally and figuratively, when it comes to the cost of living shock, because so much of this is energy generated. I think the bigger issue I have with net zero going forward in terms of cost of living, and it fits with a much bigger point that we haven't really touched on yet, so excuse me for putting it in there, but the fact that we've got a shrinking labour market is actually a big concern right now, especially when we consider the long tail of inflation going forward and what that means for growth, is that we need to be thinking about the two biggest risks we have. One of them is net zero and the transition towards a green economy, because the less energy we use, the more insulated against energy price shocks we're going to be going forward. So we need to think about both a business and consumer offering that might revive shock horror, something a bit like the Green Deal way back, which was a finance package that could be offered that offset the cost of home or business improvements, premises improvements, against the future energy savings. So we need to start reviving some of those financing mechanisms to make it so that people see it as preserving themselves from cost of living, as they have done in Germany. But we also need to think more generally about these twin issues of moving towards net zero, reducing consumption, but also having an older population and the sustainability of the economy in that regard. And I think the thing that's really, really lacking in terms of thinking about a growth future and a plan for business alongside taxation is also how we think about broadening our perspective on migration post-Brexit to consider how we have that really good flow of labour that we need against a falling birth rate and an ageing population. Because ultimately, so many of these conversations we're having about fiscal sustainability are about how to afford an ageing population. So yeah, I think net zero needs to be thought about in terms of the affordability we have based on the size of the labour market we have.
One of my favourite pet conversations, which is the demographic impact on fiscal and growth, that not lots of people like to talk about, but I always like to point them to the incredibly scary OBR chart that tells you what happens because of our ageing population and how to deal with it. But that's, I think, matter for another day. Anthony, can I come to you on net zero and
yeah.
Go on, you're going to come in on
that?
So
I just declare an interest that I'm actually also, as well as being on the Treasury Select Committee and in fact chair of the Conservative Backbench Treasury Committee, I'm also chair of the All-Party Parliamentary Group on the Environment, and I've had a lifelong interest in environmental issues, and indeed I was environment editor of the Observer and the Times in previous careers. I actually hosted a meeting with Alok Sharma, the president of COP26, yesterday, with an all-party group of roughly 20 MPs and peers. And one of the things he said that the whole energy crisis, which is obviously global, has actually prompted countries around the world to want to go faster towards net zero, because a lot of it is about reducing their dependence on gas and oil and boosting wind power and solar power and nuclear power and all these things that will help insulate economies from volatile international markets. And I've always seen the reason for going to net zero, three reasons for going to net zero. So the one is climate change, which everyone talks about. And there's also national security, that actually we are funding the world's worst regimes, basically. I mean, not just Russia, but others around the world. We all know which countries they are. And the third one is economic resilience, and this is the lesson from the 1973 oil price shock, that we had good economy, and then one commodity, oil, goes up in price, and we end up with 20 years of economic turmoil and massive recession and inflation going up 24%. So you've got to improve economic resilience by reducing dependency on highly volatile commodities markets or energy markets, and you do that by diversifying your energy supplies. So there's all those different reasons to go to net zero, and in the short term, the transition. So it has no impact on the government's commitment to getting to net zero by 2050. There clearly is a transition, and we probably need to talk more about transition from where we are now to where we are in 2050. And ultimately, what matters from an environmental point of view is getting reducing our reliance on fossil fuels. But actually, where those fossil fuels come from in the meantime doesn't, from an environmental point of view, it doesn't really matter. It's more a national security issue. But I think energy now, so most of our electricity in the UK is now zero carbon or low carbon. There's more electricity generated from wind power than there is from gas. And if you add wind power and solar and nuclear together, it's better. It's more than 50% of the energy. And wind power is now the cheapest form of energy. It's only onshore wind power. Offshore is a bit more expensive. But so if you just want to increase our energy capacity, electricity production capacity, you would naturally just invest in more wind power, which is what the government is doing or encouraging the industry to do, and that applies to other countries around the world. And then things like, there are obviously transition costs, but actually they tend to be relatively short-lived. So if you look at things like electric vehicles, the cost of running an electric vehicle is a lot less than petrol vehicle or diesel vehicle. It's it's an absolute fraction of the cost. The upfront cost is greater of buying it. If you want to buy a new Tesla or whatever, although there's obviously far more cars out there now, but the actual upfront cost of buying an electric car has been dropping really quite dramatically, and they're going to be very, very price competitive soon. So actually, the cost of living pain that we've been talking about of rising petrol and diesel prices will dissipate as more people go towards electric vehicles. And the same with household energy bills. And I hosted a dinner talking about heat pumps. I have a very glamorous life as an MP. Just in fact on Monday this week, and heat pumps are expensive at the moment. There's no doubt about that. But they are a known technology. But what they don't have is the critical economies of scale. And as they start being produced a lot more, and you chart this across different products and so on, it's clearly the price will go down an awful lot, and you get the skilled people you build up the skills of people to install it more efficiently and so on. And as the cost of installing heat pumps goes down, and I think over the next few years it will go down really, really quite dramatically. And the actual cost of running a heat pump is a lot less than running gas, and obviously you won't have the same exposure of volatility to prices. So from all the cost of living problems we're discussing at the moment, the economic shock problems and everything else, will be dissipated if we actually get to net zero. And that's not to say I don't underestimate the problems that Siobhan was talking about, businesses that are struggling to survive. Then clearly they're going to, they'll have other, if they don't know how they're going to pay next month's wages, they're going to focus on that rather than on some longer term issue. But as a country as a whole, this isn't a reason to give up on net zero at all. It's a reason to double down on it.
Great, thank you very much. I'm conscious of time, and I want to come to you all very briefly to wrap up. Just any final thoughts, and in particular, what you think the Chancellor, the sort of things the Chancellor hasn't done today that you think he's going to need to address over the coming months, and in particular in the run-up to the autumn budget. But before I do that briefly, I think, Anna, one quick question from you that better asked because Will Tanner, the venerable director of Onward, put it in the chat. But he's asked that the OBR have used the word uncertainty 55 times in their EFO today, their economic and fiscal outlook. So everyone's saying the Chancellor should have done more. To what extent do you think he was genuinely able to do so, given how quickly and uncertain the sort of economic environment is? Massive changes from the October forecasts, could move again in multiple directions. Surely, therefore, was he not right to be fairly cautious today?
I think he could have kept more of his powder dry for Middle England, as it were, and do more for the bottom end of the scale at this particular point in time, and save some of that potential that he spent today further down the track, both in the economic and electoral cycle.
Yeah, so it's not a question of the scale of what he did, it's the distribution of how he did it, essentially. Very good. Right, well, I'm conscious of time, so very briefly coming to each of you in turn, what do you think the things that the Chancellor hasn't done today that he either should do or he's going to come under a lot of pressure to do in the coming 6 months heading up to the budget in the autumn? Anthony, I'll start with you.
Well, the clear one is business taxation, sorting out taxation to encourage business investment, and the apprenticeship levy to promote skills training, and the research and development tax credits. He's announced consultations on them all today, and has got to come up with answers. And this, is a key part. He's pinned it on the May's lecture, a key part of his whole drive for economic growth and to create this new culture of entrepreneurialism. So that's the thing that I'll be really watching out for. But I'm sure there'll be lots more measures on cost of living.
Vaughan, how about you? Presumably you're also looking out for that. Anything else?
Yeah. Thanks, Anthony. That was a good summary. The thing is, we need to remember is that local businesses are key to delivering levelling up, right? They are local economic prosperity. They hire local people. They support communities. So it is allowing them to thrive and grow, and that is reducing cost pressures, particularly energy cost pressures in the short term, ensuring they can get access to the finance they need for investment, and incentives to give them, ultimately, it's business confidence to push ahead with those investments.
Thanks very much, Vaughan. And Anna.
This could have been the energy efficiency spring statement for businesses and consumers alike. And I think he could have built some radical tax incentives to allow for it that would have been quite exciting and would fit what seems to be often quite a radical agenda with the Chancellor, but sometimes doesn't quite go as far as you hope.
Very good. Well, thank you very much, all. I think my 2 pence worth, I think the thing he's going to come under real pressure is he's got all his spending review totals are set in cash from the autumn last year. So all of the spending on public services in real terms is now going to be much less generous. I think come public sector pay rounds and come the autumn, there's going to be huge pressure to increase that envelope. And that's before you start thinking about what you're going to do about the defence budget. But those are problems for another day for him. So we've gone slightly over. I just want to say thank you very much all. Thank you, Anthony. Thank you, Shawn. Thank you, Anna. And thank you to all our participants, and speak to you all soon.
Thank you.
Thank you. Great to see you.
Bye.
Bye.